Indian business tycoon Gautam Adani was the third richest person in the world and the richest person in Asia up until approximately 2 weeks ago. Their estimated personal worth on January 17, 2023, was $133 billion. However, the group's member company's market value has dropped by $108 billion during the past few days. Adani has lost $48 billion of his own wealth and has slipped from 3rd to 16th place on Forbes' list of the world's richest people. What caused it all to occur? The Adani Group was planning to sell shares of Adani Enterprises for 20,000 rupees crore in a follow-on public offering on January 25. However, the American company Hindenburg Research released a study the day before that, charging the Adani Group with years of stock manipulation and accounting fraud. Hindenburg specializes in short selling, which is the practice of attempting to drive down the price of a company's shares. The Adani Group described Hindenburg's research as a securities scam, an affront to Indian regulators and the judiciary, but that did not relieve investors' concerns. The Adani Group has 7 publicly traded businesses that operate in a range of industries, including renewable energy, commodity trading, utilities, ports, and airports. Billions of dollars have been invested in or lent to group-affiliated enterprises by numerous Indian banks and government insurance organizations. The business owned by Indian billionaire Gautam Adani abruptly stopped selling its shares in an effort to reassure investors. On Wednesday, Adani Enterprises unexpectedly declared it will return $2.5 billion, £2 billion, of the selling revenues to investors. Since the release of last week's study by American research firm Hindenburg, shares of Adani Group have been declining. According to the research, Adani's businesses have engaged in the largest scam in the corporate world. The choice will have no influence on our existing activities and future plans, according to Adani. There was no notable response when the sale of Adani Enterprises shares began on January 25. Due to the absence of retail investors, only 3% of its shares were subscribed on day 2. However, the organization was supported by corporate funds and overseas institutional investors. A member of the royal family of the United Arab Emirates supported Abu Dhabi's international holding company, which invested $400 million in a share sale on January 30. According to Bloomberg, Indian businessmen Sujjan Jindal and Sunil Mittal also latecomers to the equity sale. Adani Enterprises abruptly declared on Wednesday that it will give investors $2.5 billion, £2 billion, of the selling proceeds. The business owned by billionaire Gautam Adani abruptly stopped selling shares in an effort to reassure investors. According to rumors, the Central Bank of India has asked the nation's lenders for information regarding dealings with the firm. A political debate has also been sparked by this problem. Adani, who is thought to be close to Prime Minister Narendra Modi, has long been the target of accusations from opposition lawmakers that he has benefited from his contacts in politics. Adani disputes these claims. After Adani's shares dropped on Thursday, opposition parties demanded a debate in Parliament on the danger to Indian investors. Additionally, he requested an investigation of Hindenburg's claims.